Welcome back, Focus Learners. I am so glad you're here today. If you've been watching the energy sector lately, you know the transition to renewables is just, well, it's creating some massive corporate success stories. Today, we've got a seriously fascinating case study to unpack. We are looking at the anatomy of a boom by deconstructing Waaree Renewable Technologies Limited's massive FY26 financial results. And look, we aren't just going to rattle off numbers. We are going to dig into the actual mechanics of how they pulled this off in this explainer.
Right off the bat, the company's motto is execution with pace and comfort. Now that might just sound like a catchy marketing tagline, right? But when you really dig into their earnings call, that motto perfectly sets the stage for the operational masterclass we are about to look at. Because in the EPC world, engineering, procurement, and construction, execution is literally everything.
All right, let's lay out the roadmap for this breakdown. First, we'll hit those record-breaking FY26 results. Second, the renewable industry boom. Third, decoding their order book. Fourth, margins and revenue mix. And finally, new ventures, specifically BESS and IPP.
Okay, let's jump straight into Section 1. Record-breaking FY26 results. The financial blitz. 131.31%. Just let that sink in for a second. That is Waaree RTL's revenue growth for Q4 compared to the exact same quarter last year. We are talking about total revenue from operations hitting over 1,102 crores in just one single quarter. That number right there, that tells us immediately that this company is operating with some serious momentum.
But we all know top-line hype doesn't mean a whole lot if you can't bring it down to the bottom line, right? So check this out. Their FY26 profit after tax, or PAT, growth was 109.09%. For the full year, PAT crossed 478 crores, which really just proves this hypergrowth isn't just about aggressively winning bids. It's about incredibly disciplined bottom-line execution.
And this jump really drives that exact point home. Look at the scale-up in their EBITDA. They went from roughly 310 crores in FY25, jumping 106% to over 641 crores in FY26. I mean, that is the literal definition of operating leverage. As their full-year revenue soared past 3,331 crores, they managed their costs so efficiently that profitability scaled right up there alongside it.
Moving on to Section 2, the renewable industry boom, contextualizing the market.
To really understand Waaree's numbers, we have to look at the macro picture. India's clean energy transition just crossed a huge milestone, 274 gigawatts of total installed renewable capacity. But the real story here is the absolute dominance of solar. It makes up over 150 gigawatts of that pie. You've got ground-mounted solar doing the heavy lifting at nearly 115 gigawatts, supported by another 25-plus gigawatts of rooftop solar. Basically, solar is the undisputed king right now, making up an unbelievable 82% of all renewable capacity added this past year.
And that overall pie, it is growing incredibly fast. Just looking at the macro tailwinds, in FY26 alone, the country added over 44 gigawatts of solar capacity. That's a huge leap from the 23.8 gigawatts out of the year before. And this total explosion in demand is being driven by super stable government policy frameworks, things like the National Solar Mission, PM QSUM, and the PM Surya Ghar Yojana. All of this creates this massive, swirling tailwind for EPC players like Waaree.
Which brings us to Section 3, decoding the order book, sustaining the execution.
The contrast we're looking at here tells a really fascinating story. On one side, you have their FY26 execution, 2.7 gigawatts, or 2,727 megawatts. That is the highest execution they've had in any single year ever. But then, on the other side, their unexecuted order book is sitting at 2.83 gigawatts. Think about that. Even after a completely record-breaking year of finishing projects, they literally have a massive pipeline of work still waiting for them, which gives them incredible revenue visibility for the next 12 to 15 months.
And if you're wondering where all this building is actually happening, they're operating across several major states. Their core geographies include Rajasthan, Gujarat, Madhya Pradesh, Andhra Pradesh, and Maharashtra. During the earnings call, management actually called out Rajasthan specifically as being a real heavyweight in their unexecuted order book right now.
Now, that detail naturally led an analyst to ask a really smart question during the call. Everyone knows there are some pretty well-documented delays with grid infrastructure and power evacuation substations in Rajasthan. So does that bottleneck hurt Waaree's ability to execute projects and actually get paid? Well, management's answer was super reassuring. They explain that the project developers take on that early-stage risk. By the time Waaree even gets the EPC contract, the developer has already secured the land, sorted out the connectivity, and cleared those hurdles. So Waaree's timeline is totally insulated from those early grid delays. They literally just show up and build.
Okay, Section 4, Margins and Revenue Mix, Decoding Realizations.
So, during the Q&A, analysts spotted this kind of financial anomaly. The implied revenue realization for Q4 was noticeably high, coming in at roughly 20 million Indian rupees, or 2 crores per megawatt. Naturally, analysts wanted to know what was going on. Is this just the new normal, or was it a one-time fluke?
Well, the answer all comes down to the specific types of contracts Waaree takes on. Some contracts are what's called pure EPC. That means the customer actually goes out and buys the solar modules themselves. But other contracts are with module, meaning Waaree procures the modules for the client, which obviously drives up that top-line revenue per megawatt. Now, normally their mix is only about 20% with module, but for this specific quarter, that mix spiked all the way to 50%. And that is exactly what skewed the top-line realization upwards. It's a really important nuance to catch, so we don't just blindly project those abnormal revenues into the future.
But honestly, regardless of how that revenue mix shakes out, their margin defense is exceptional. Management is on record stating that their internal target, their guiding threshold, is to maintain an EBITDA margin of around 15%. Yet, their actual EBITDA margin for FY26 came in at a really robust 19.24%. They credit this outperformance to operational improvements, getting things delivered on time, and just having incredibly tight budget controls on their fixed-price contracts.
And that leads us into Section 5, New Ventures, BESS, and IPP, Fueling Future Growth. First up, let's talk about BESS. That stands for Battery Energy Storage Systems. It makes perfect sense, right? As solar expands, the power grid needs massive battery installations to store all that energy for when the sun goes down. Because of that, BESS is being heavily bundled into new renewable tenders. Management estimates that adding these BESS scopes to their EPC work represents an incremental opportunity of roughly 0.5 to 0.75 crores per megawatt. That is a massive new revenue lever they can pull on future bids.
Next up is IPP, or Independent Power Producer. Historically, Waaree has been an asset-light EPC company. They build the plants for other people. But under the IPP model, they actually build and own the solar plant, and then they generate and sell the power directly. So why shift the model? Well, because an IPP yields this highly predictable recurring revenue stream that lasts for 20 to 25 years.
Let's actually look at how this builds out in practice. Step 1, right now, they currently have 54.8 megawatts peak of operational IPP assets. Step 2, they are in active expansion mode, setting up another 227 megawatts peak. And step 3, honestly, this is the kicker, they are funding this entire expansion through internal accruals. Yep, zero debt. They are taking on absolutely zero debt to build these assets. So they managed to keep their asset-light philosophy largely intact while locking in decades of future cash flow.
And look, if their current unexecuted order book wasn't wild enough, just look at the bidding pipeline they're chasing right now through bilateral discussions. 36 gigawatts in total. We're talking 23 gigawatts domestically and another 12 gigawatts internationally. Now, management rightly points out that it's impossible to predict an exact hit ratio on these bids, but just the sheer volume of at-bats they are taking is absolutely staggering.
Which really brings us to the ultimate question I want to leave you with today. With an impeccable track record of execution, this massive 36-gigawatt bidding pipeline, and a highly strategic shift into long-term BSES and IPP revenues, can Waaree RTL actually maintain this record-breaking momentum in the years to come? The anatomy of their boom so far is undeniable. But for us, focused learners, it's their next moves that we really need to watch closest. Thank you so much for joining me on this explainer, and as always, keep your eyes on the data.